Fundamental analysis is a crucial tool for investors to evaluate the financial health and future prospects of a company. By assessing key financial ratios such as price-to-earnings ratio, return on equity, and debt-to-equity ratio, investors can gain insight into the company's profitability, efficiency, and financial leverage. In addition to financial ratios, fundamental analysis also considers qualitative factors such as the company's competitive position, industry outlook, and management team. This holistic approach provides a comprehensive understanding of the company's intrinsic value and growth potential. One of the most significant advantages of fundamental analysis is its long-term perspective. While technical analysis focuses on short-term price movements, fundamental analysis looks at the underlying factors that drive a company's performance over time. This allows investors to make informed decisions based on the company's underlying value rather than short-term market fluctuations. Moreover, fundamental analysis can help investors identify undervalued or overvalued stocks, providing opportunities for potential investment or divestment. In conclusion, fundamental analysis is essential for investors looking to make informed investment decisions based on the underlying fundamentals of a company. By evaluating both quantitative and qualitative factors, investors can gain a comprehensive understanding of a company's financial health and growth prospects, ultimately leading to more informed and successful investment decisions.